Today, we're diving into a big surprise from one of the world's biggest car companies, Toyota. This isn't just another routine update. It's a move that's caught the attention of industry insiders and everyday drivers alike. Whether you're a car enthusiast or just someone who's curious about what's happening in the world of business, this announcement is worth your attention. You know them for the Camry, the RAV4, cars you see everywhere. These vehicles have become household names, trusted by millions for their reliability and value. Toyota's reputation for quality stretches across generations and continents. Toyota just made a major announcement that's got the business world buzzing. News outlets are scrambling to cover the story, and analysts are already weighing in on what it could mean for the future of the auto industry. Despite facing tough challenges, especially in the US with expensive tariffs and shifting market demands, Toyota expects to make even more money this year than they originally thought. That's a bold prediction in today's unpredictable economic climate. That's right, while costs are up, profits are up too. How is that possible? It's a question that's left many scratching their heads, but Toyota seems to have found a formula that works, even when the odds are stacked against them. This isn't just about cars. It's about how global companies adapt and thrive in a rapidly changing world. Toyota's reach extends far beyond Japan, touching lives in nearly every corner of the globe. Toyota's story is a lesson in resilience and smart planning, finding new routes when you hit a roadblock. Their engineers and business leaders are constantly rethinking strategies, innovating, and staying one step ahead of the competition. We'll break down why Toyota is so optimistic and how they're navigating these choppy waters. From boardroom decisions to the factory floor, every move is calculated to keep the company moving forward. It's a fascinating look at a company that's been a giant for decades and is still finding new ways to grow. Their journey is filled with innovation, tradition, and a relentless drive to improve. This is about strategy, global economics, and a bit of corporate magic. Toyota's ability to anticipate trends and pivot quickly is a big part of their ongoing success. Today, we'll put the puzzle pieces together and see what picture emerges. We'll explore the factors behind Toyota's confidence and what it could mean for the industry as a whole. It's going to be fun and informative. So, let's get started. Whether you're a Toyota fan or just love a good business story, there's something here for everyone. Because Toyota's next move could change the game, not just for themselves, but for the entire automotive world. So, what did Toyota actually say? They raised their full-year operating profit forecast. That means they're telling investors and the world they expect to make more money by March. The new forecast, 3.4 trillion yen, or about $22.6 billion, a 6% jump from earlier predictions. Why does this matter? A profit forecast is like a company's self-issued report card. Raising it signals real confidence. Even though their most recent quarterly profit dropped by 27%, Toyota is looking at the bigger picture. They're saying, yes, we had a tough quarter, but our global strength will carry us through. This kind of optimism from a giant like Toyota gets attention. Their chief financial officer, Kenta Kon, summed it up. While one market is tough, performance elsewhere is solid. That's the power of not putting all your eggs in one basket. Toyota's global reach is their safety net. If the US is tough, where's Toyota winning? Pretty much everywhere else. While headlines often focus on the American market, Toyota's real story is unfolding across continents, in places where the brand is quietly dominating. Strong performance in China, Europe, Asia, and Africa is fueling their optimism. In these regions, Toyota's reputation for reliability and value has made it a household name, and sales are surging as economies grow and more people can afford cars. For years, North America was Toyota's profit engine, driving the company's global ambitions and funding innovation. But relying on one market is risky. Economic downturns, shifting consumer preferences, or regulatory changes can quickly turn a stronghold into a vulnerability. A decade ago, half their profits came from North America. Today, that's changed. Toyota has worked hard to reduce its dependence on any single region, spreading its bets across the globe. Toyota's deputy CFO, Takanori Azuma, says markets like India are now crucial to their bottom line. India's rapidly expanding middle class and demand for affordable, durable vehicles make it a key growth engine. As more people in emerging economies buy cars, Toyota's investments in these regions are paying off. The company is seeing record sales in places that were once considered secondary markets. They've tailored cars to local needs, built loyal customer bases, and adapted their lineup to fit everything from city streets to rural roads. And by diversifying their revenue streams through financing, after-sales service, and even mobility solutions, Toyota has created a business that's resilient and flexible. So, while headlines focus on US struggles, Toyota's real success is global. The company's ability to thrive in diverse markets is what sets it apart from competitors. Their sales in China, Europe, and Asia are solid, providing a powerful safety net. These regions now account for a significant share of Toyota's global profits. This global balance lets them absorb hits in one region without crumbling. It's a cushion that many automakers envy, and it's the result of years of strategic planning. It's a strategy that's keeping Toyota on track for record profits, even as the industry faces uncertainty and change. That's how you play and win the global game. Toyota's worldwide approach isn't just smart, it's essential for long-term success in today's unpredictable market. Now let's talk about the big challenge: US tariffs. These tariffs have become a significant hurdle for many companies, especially those in the automotive industry. Tariffs are taxes on imported goods, and for Toyota, they're a massive expense. These costs add up quickly, impacting the overall financial health of the company. This year alone, US import tariffs will cost Toyota about 1.45 trillion yen. That's a staggering amount, equivalent to billions of dollars. That's a direct hit to profits. So much so that Toyota's North American business reported a loss for the first half of the year. This is a significant setback for a company that has been a market leader. Even with strong US demand, tariffs wiped out all profit and more. The high demand couldn't offset the financial burden imposed by these tariffs. Toyota's CFO, Kenta Kon, calls the North American situation very tough. The company is facing unprecedented challenges in this key market. It's like running a popular bakery, but the price of flour triples overnight. The sudden increase in costs can be devastating. This highlights the complexity of being a global company. Government decisions can instantly reshape your bottom line. Navigating these changes requires agility and strategic planning. For Toyota, tariffs have turned a key market into a financial headache. The company must find ways to mitigate these impacts. That's why their global success is more important than ever. Diversifying markets can help cushion the blow from regional challenges. They're adapting, absorbing costs, and keeping cars affordable for Americans. This commitment to their customers is crucial for maintaining market share. It's a delicate balancing act, and a lesson in resilience. Toyota's ability to navigate these challenges will define its future success. So, how does Toyota fight back against billions in extra costs? By doing what they do best, cutting costs through efficiency. Toyota's legendary production system, Kaizen, focuses on eliminating waste and making constant improvements. These cost reduction efforts are a huge reason they could raise their profit forecast. They're building cars more efficiently, using fewer materials, and streamlining logistics. Think of it like packing smarter for a trip. Same journey, less baggage. Every small saving adds up when you build millions of cars. This relentless efficiency is their weapon against rising costs. The recent profit forecast specifically credits these efforts. By tightening belts and becoming leaner, Toyota offsets tariff damage. It's a proactive approach, controlling what they can, not just reacting. Instead of letting external pressures dictate their fate, they double down on internal strengths. That's classic Toyota, and it's working. Alongside cost-cutting, Toyota's other big move is expanding in emerging markets. They're not just selling the same cars everywhere, they're designing vehicles for local needs in places like India, Asia, Africa, and Latin America. As middle classes grow, more families can afford their first car. Toyota's smart investments in these regions are now paying off, offsetting US tariff losses. It's diversification in action, like a balanced investment portfolio. They're building factories, creating jobs, and becoming part of local economies. This isn't just about sales, it's about long-term presence and resilience. Toyota's global expansion is securing their future. Strategies are great, but Toyota's core job is building cars, and they're doing it at record pace. Global production jumped over 10% in September, marking 4 straight months of growth. Why? Supply chain issues, especially chip shortages, are easing. Now, Toyota can meet pent-up demand and boost sales, even in the tough US market. Strong demand plus the ability to deliver equals revenue growth. More cars rolling off the line means more money to cover costs, including tariffs. This production surge is a key reason for Toyota's confidence. When your factories are humming, your business is healthy. Operational strength is fueling their optimistic outlook. Toyota is firing on all cylinders. Let's get back to the numbers. Toyota's new profit forecast is 3.4 trillion yen, about $22.6 billion. But last quarter, profits actually fell by 27%, missing analyst expectations. The market reacted fast. Toyota's stock dropped 3.65% on announcement day. Investors focused on the short-term dip, not the long-term forecast. But Toyota's leaders aren't fazed by daily stock swings. They're sticking to their strategy, cost control, and global expansion. The numbers show a company weathering a storm in its biggest market, but thriving globally. The market may frown for a day, but Toyota's forecast says they're smiling about the road ahead. That's the bigger story. So, what does all this mean for Toyota's future? It's a story of resilience and smart strategy. They're not just surviving tariffs, they're getting stronger through cost-cutting and global expansion. Kaizen, relentless efficiency, is their secret weapon, softening blows from tariffs and supply chain issues. Expanding in markets like India and Africa is future-proofing their business. A decade ago, US trouble would have been a crisis. Now, it's manageable. Global balance means Toyota isn't tied to any one country's fate. They're building stability and opening new growth avenues worldwide. By controlling what they can and investing smartly, Toyota is built to withstand storms. Their steady, powerful approach will keep them a global leader for years to come. And that's a road worth watching.